Mortgage rates are falling again, and this week one lender has slashed rates by up to 0.5%. So if you're remortgaging or buying a property, this is the kind of week that you'll want to pay attention to. It's been a very busy week. HSBC, Santander, Leeds Building Society, and even Generation Home have all trimmed their mortgage rates. Landbay increased their maximum loan sizes to a hefty 3 million. The Bank of England reported another boost in mortgage approvals, and Santander is taking over TSB for £2.65 billion. But it's not all one-way traffic. We are seeing some deeper shifts that could affect pricing, competition, and how easy it is to get approved in the months ahead. So on the rate cut front, it has been a very busy week this week. HSBC, Santander, Virgin, Generation Home, TMW, Bank of Ireland, Leeds Building Society, and West Brom, amongst a few other smaller lenders, all reduced rate across various residential and buy-to-let products. TMW made one of the bigger moves this week, with rates trimmed by up to 0.35%, and Kensington trimmed their 90% loan-to-value rates by up to 0.5%. So that's great news for buyers with a smaller deposit. West Brom introduced new 60% loan-to-value pricing and reduced their 5-year fixed rates for purchases and remortgages. And we even saw Nationwide reducing some rates by up to 0.2%, whilst also upping their maximum loan sizes on 3 and 10-year fixes. But here's a question for you. If you're on a fixed rate that's ending in the next 6 months, would a new 5-year fixed rate tempt you right now? Or are you holding out for better, or would you even consider a 2-year fixed rate? Let me know in the comments. Let's move on to criteria changes and product tweaks. So Landbay is stepping up in the specialist space, increasing their maximum loan sizes to 3 million on small HMOs and multi-unit freehold blocks. April Mortgages now accept let-to-buy applications, which gives home movers a bit more flexibility and access to some of their market-leading 7 times loan-to-income ratio products. And then, of course, there was the news of Santander agreeing to take over TSB for that hefty sum of £2.65 billion. Now, whilst that isn't necessarily news that we would normally cover, it does have potential impacts on the mortgage market. It's not going to affect consumers immediately, but looking forwards, fewer lenders means less competition, means less products available to consumers, and most importantly, it means there's not so much pressure on competitive mortgage rates when there are less lenders in the market. So overall, in my opinion, this is not great news for consumers. Now, moving on to the wider economy, data released by the Bank of England this week shows that mortgage approvals rose once again. They're up by 2,400 in May to 63,000, which is a strong sign of growing market confidence, and something that we are certainly seeing on the ground with an influx of inquiries and applications taking place. So it most definitely is getting busier, and it does seem that consumer confidence is rising. That said, the latest nationwide house price index was also released this week, and it shows that annual house price growth slowed from 3.5% in May to 2.1% in June. Now, I know that sounds like a dip, but in reality, it reflects a market returning to normal post that stamp duty rush that we saw. And let's also not forget that that data from Nationwide is only relevant to the nationwide mortgage approvals. It's not based upon the wider market, just like the Halifax House Price Index is also not based on the wider market. The only data that covers the whole market is the ONS data. As for swap rates, well, their falls continue, and that's why we're seeing all of these rate reductions from lenders, which is great news if you're buying a property or if you're one of the supposed 1.8 million borrowers that need to remortgage during the second half of this year. So what does all of this mean? Well, in reality, it's a really encouraging time if you're looking to buy or remortgage. Lenders are easing up on criteria and rates are moving in your favour, at least for now. Because as we all know, we can never assume that these rate drops will last forever. We've seen pricing bounce in the past when swap rates rise, or if there's some unexpected inflation data or other global event that affects our home shores. So my tip, if your current fixed rate deal does end within the next 6 months, is that it's probably worth looking into something now, or at the very least getting your paperwork ready so you can move quickly when you need to. Now, here's what I want to know from you this week. Are you currently searching for a new deal, or are you sitting tight and waiting to see what happens with interest rates in the next couple of months? And please do drop a comment and let me know what your biggest worry is right now. Is it that rates could go back up, that the choice of lenders is reducing, or you might just be worried about getting through the affordability checks? Like I said, please do drop a comment below. And whilst you're there, please also let me know what you would like to see me cover in future videos. Obviously, I cover all data that I think is relevant to the mortgage market, but if there's something specific that you'd like me to cover, then please do let me know and I will give it some serious consideration. As always, I really do appreciate your support in the channel, so why not consider hitting that subscribe button? That way you'll be notified every single week when the latest video is released. If you have found this update useful, then please do give it a thumbs up and maybe share it with a friend or a colleague who you think would find it useful. I'm here breaking all of this news down every single week, so you don't have to scroll through about 15 different news sites to stay ahead of the game. Thanks for watching, and I'll catch you next week. Take care.